Hi guys, welcome to another video, From Little to Simple. Well, if the title of this video raised more questions in your mind than it answered, take comfort in the fact that you're not alone. While everyone has at least heard about investing in stock markets or other financial instruments such as bonds, most people wouldn't have heard about alternative investing. This is because, until recently, alternative investing was accessible only to the super rich. But now, times are changing, and slowly, alternative investing is becoming more and more accessible to retail investors like you and me. In today's video, we'll try to explain the concept of alternative investing in the simplest possible way, and why one should have alternative asset classes in their investment portfolio. Now let's roll. Globally, investing is mainly focused on a few asset classes in the banking and financial sectors. These asset classes are very well known and get extensive coverage in media, and hence, most retail investors tend to know about them. Let's refer to them as conventional asset classes for the purpose of this video, and they include asset classes such as stocks, bonds, derivatives. But unknown to most people, there are many other asset classes that are in no way related to the banking or financial sectors and give returns on investment that are comparable to, and sometimes even at par with, conventional asset classes. Investing in these asset classes is known as alternative investing. The performance of conventional asset classes tends to be correlated to macroeconomic trends. Hence, they do not provide any downside risk protection in times of economic turmoil or recession, whereas a diversified portfolio of alternative assets is fundamentally unattached from the financial markets and does not move in tandem with them, offering an independent, uncorrelated investment. Thus, investing in alternative asset classes can be a great hedge against any turmoil in broader financial markets. There are a wide variety of alternative asset classes, and they can range from startups to crypto to art to wine. Let's go through all of them one by one. Art as an asset class is uncorrelated to the broader financial markets and benefits from stability during economic downturns. And you might be wondering, how can an average retail investor invest in million-dollar works of art? Well, it was not possible until recently, but with the advent of startups like Masterworks, it is now possible to own a small fraction of $1 million work of art while reaping the same benefits as someone who owns the entire piece. Fine wine appreciates over time. Annual fine wine production is generally capped by suppliers. Each year there is a fixed supply, but growing demand. This causes price fluctuations around the release of certain vintages. However, once a vintage is released, the quality and supply variables begin to drive consistent appreciation. Fine wines are created to be highly ageable. As wines age, their quality improves, which drives demand. While demand increases with time, supply moves in the opposite direction. Fine wine has an ever-decreasing supply. This supply and demand dynamic drives consistent capital appreciation in the fine wine market. Contrary to what most people think, you need not buy and store wine to invest in it. Instead, it is now possible to invest in wine without physically taking possession through platforms such as Vinovest. Successful startups grow very big, very fast, and most of this value is captured by venture capitalists, angel investors, and private equity funds. In the heady days of the 1980s, companies would go IPO 5 or 6 years after founding. Today, it's 12 years. The 1980s also coincide with the birth of private equity and venture capitalist firms. The amount of private capital chasing efficient startups is at unprecedented levels, and valuations are rising quickly. When companies do list on the stock markets, it is mostly to provide an exit to private market investors. The bulk of the growth in companies is occurring while they are still private. More than 35 public software companies were valued at more than $10 billion between 2004 and 2015. 1 in 6 of these companies was already valued above $10 billion while being privately held. One of them was Facebook, now Meta. Imagine being at the same table as Peter Thiel and enjoying the rapid growth of Facebook in its early days, or owning a small piece of a company like SpaceX, which is redefining what's possible. Well, investing in startups is not exactly simple, but it is now possible for retail investors to invest in startups. And if you'd like to know how, then please subscribe to our channel, as we'll soon be creating a dedicated video on investing in startups. We do not consider crypto as a whole to be an alternative asset class, as it has recently shown high correlation to the stock market. But we definitely consider NFTs to be an alternative asset class. When we say NFTs, we're not referring to some JPEG image that stays in your crypto wallet. Instead, we are referring to revenue-generating NFTs, such as a hit song by a popular pop star or video clips of some of the greatest events in history. Asset-heavy industries prefer to lease some of their equipment or machinery. This can range from cloud kitchens leasing cooking utensils, Airlines leasing airplanes instead of buying them. Equipment financing provides stable and predictable returns to investors for a fixed period of time, and can be a great hedge against volatility. As soon as one hears the word agriculture, they imagine farming crops like corn or barley. But what most people do not understand is that exotic crop farming is a highly profitable industry offering great returns. By exotic crops, we are not referring to some plant that flowers once in 100 years. We are referring to crops that are used in the production of some of the costliest foods in the world, such as expensive chocolates or wines. Cocoa, grapes, dry fruits are a few examples of exotic crops. And recently, due to changing regulatory scenarios, even marijuana can be considered an exotic crop in a few countries. Investing in exotic crops can be an excellent hedge against short-term market volatility, as most of the harvest from these crops is sometimes booked several years in advance. By real estate, we are not referring to homes or typical commercial properties. Instead, we're referring to high-yield real estate assets such as warehouses, vacation rentals, distribution centers, data centers. The yields on these assets rarely go down, even during the worst times of recession. In simplest terms, litigation financing is bearing the legal costs of a court case, for a share of the proceeds, when and if the party you supported wins the case. Litigation financing is being considered an alternative asset these days mainly due to the multiplier effect it has on investments, if you end up supporting the correct side. There are a few other alternative investment asset classes such as peer-to-peer financing, investing in students for a percentage share of their future earnings, investing in collectibles. However, they carry slightly higher risk and hence, we did not cover them in detail in this video. Some of you might have noticed that we did not cover the different ways in which you can invest as a retail investor in each of these alternative asset classes. We didn't do that because 1. It would have made this video unbearably long. 2. Covering the various ways to invest as a retail investor in each of these asset classes deserves a video of its own. And yes, those videos are coming soon. So make sure to subscribe to our channel. Thanks if you've made it this far into the video. Please let us know your thoughts on this video in the comments below. If you found this video interesting, please like and share it with your friends, and subscribe to our channel for more videos like this one. Until next time, have a good one, guys.